Did you know that there's a battle going on right now that will decide the future of our entire society and economy? And no, it's not the battle in Iran. It's not the battle between left-wing and right-wing politics. It's the battle between central bank digital currencies, stablecoins, and the free society. This battleground is where money, power, and technology collide. Whoever claims victory will get to shape our civilization for the next 75 to 100 years. So, first of all, what is a central bank digital currency? CBDC. CBDCs are basically a digital version of a country's official money created and controlled by its central bank. Instead of using physical notes or coins, people would hold and spend this money electronically through apps or digital wallets. I know what you're thinking. Isn't money already digital? We all pay for things using our phones, contactless cards, or by digital bank transfers. The key difference is who creates and controls the money. Most digital money today, like the balance in your bank account, is actually issued and managed by commercial banks, even though it represents government currency in the background. A central bank digital currency, on the other hand, would be created and held directly by a country's central bank, meaning it's a direct claim on the government rather than on a private bank. In simple terms, today's digital money is like a digital IOU from your bank, while a CBDC would be actual digital cash issued directly by the state. At present day, over 130 countries, representing 98% of global GDP, are involved with CBDCs in some way. Some countries have already introduced them, like Bahamas, Nigeria, and Jamaica. Other countries are actively running advanced pilot programs, like China, India, Russia, and Brazil. Other countries are researching and developing them, like the UK, European Union, Australia, and UAE. Some countries have pushed back against them, like the United States and Norway. So, why are so many people fearful of CBDCs? To put it simply, CBDCs have the potential to give a tyrannical government almost limitless power. With cash, transactions are mostly anonymous. The government can trace your payments, but it will need to go through extensive legal processes to do so. With CBDCs, payments become fully traceable instantly. Governments will see what you buy, where you spend, and when you spend. People will find themselves living in a financial surveillance system that tracks their every move. This is the same reason why people are fearful of digital ID, which the UK government is currently trying to implement, despite major backlash.
This government will make digital ID mandatory by the end of this Parliament.
And it gets worse. Unlike cash, CBDCs can be programmable. They could be given expiry dates to force spending. They could be restricted to prevent people from buying certain goods. They could be limited or blocked in any way the government wants. In extreme cases, funds could be frozen if the government wanted to censor or punish you. All of this would potentially lead to a social credit style system. Every person could have a social credit score linked to their good behaviour as a citizen. Their social credit score would then be linked to the finances, meaning your ability to pay for things could be impacted if you did things the government didn't like. But hang on. The Bank of England has promised its proposed Bitcoin CBDC would protect people's privacy, and it would never program money for control. Well, that might be the case for now. But the problem is that a future government could come in with a different idea. If the infrastructure for CBDCs was already in place, it wouldn't take much for them to change the rules, and then bang! We're all living in an Orwellian surveillance state, fully enslaved to the financial system. But there is an alternative system challenging CBDCs. These are called stablecoins. The key difference between stablecoins and CBDCs is who controls them. CBDCs are issued by a country's central bank and represent a digital form of that country's sovereign currency. Stablecoins, on the other hand, are created and controlled by private companies. This means that, theoretically, they wouldn't be controllable by tyrannical authoritarian governments. Think of stablecoins as a type of cryptocurrency tied to real-world assets like cash, gold, or government bonds. Unlike Bitcoin or other cryptocurrencies that can go up or down a lot in price, a stable coin aims to stay close to a fixed value. For example, one coin equals $1. They're often used to move money quickly, send payments, or store value in crypto without dealing with big price swings. The idea is that holders can benefit from the relative stability of cash, gold, or bonds, while still using a digital asset that can be transferred quickly on a blockchain. A blockchain is a digital record of transactions that many computers share and keep updated together. So stablecoins are our best bet for a rosy future then? Not so fast. Because stablecoins are issued by private companies, there could be concerns around transparency and regulation. People are also worried about the stablecoins not being appropriately backed by reserves, such as gold or dollars. This means that if there is a run on stablecoins, meaning everyone tries to exchange their stablecoins for cash at the same time, the whole system would collapse like a house of cards. However, regulation is constantly improving and stablecoins are being professionalized more and more, day by day. So, what does the future hold? We've already talked about the worst case scenario, where government use CBDCs to control people's lives. But it's also important to look at the possible benefits. For starters, many countries are making sure that physical cash doesn't disappear anytime soon. That means CBDCs, stablecoins and cash could all exist together, giving people different options for how they want to pay and store money. CBDCs could also be really helpful for people in rural areas or poorer countries. They could make it easier to send and receive money quickly and cheaply, especially in places where banking services are limited. On top of that, they could help reduce certain types of crime linked to physical cash, like theft. In the future, we'll probably see a mix of different financial systems all existing at the same time, both within countries and across the world, where government control, corporate power, and personal freedom are all pushing against each other. That's why it's so important for people to stay informed and pay attention, because this battle won't just be decided by governments or big companies, it will also be shaped by the choices that all of us make. Watch this video to the left of me if you want to understand why our capitalist system might be reaching the end of the road and what might come after it. Thanks for watching. See you on the next one.